Sorry, I just needed to set the video going for the one or two that can't come. Just going over the assessment with you tonight. It'll be quite a short class, part of the reason being I don't particularly want to confuse you by doing other things while you're looking at your assessment. But secondly, I have a few responsibilities with our degree program, and we have some Scottish visitors out from the Scottish University. So if you'll excuse me, we probably won't be too much later than about 10 or 6:15. So turning to the assessment, the first thing to make sure everybody knows is towards the very bottom of the front page, under the bold type, there is something that says the presentation of this assignment must be in your own handwriting. Please completely ignore that. I don't want it in your own handwriting. So, turning to the assessment, let me go through it with you. This covers, with one exception, the material up to the end of the number 3 handout, the balance sheet. So this particular assessment sets you going with a scenario about a small hairdressing business called Smart Cuts. The first question talks about the three of the possible types of business. A sole trader, you'll remember that's generally a single person, partnership, 2 or more people, or a small company. Now, the 7 marks is asking you to explain to Mari at least 4 aspects of each of the following forms of ownership in relationship to the current situation of Smart Cuts. That comes from what we talked about early in the piece, and there were some PowerPoint slides talking about types of ownership as well. There's also a section in your textbook.
Pages 11 to 13 if anyone's...
Oh, thank you. Pages 11 to 13. Wonderful. The second question is talking about the process of the accounting cycle as it would apply to Smart Cuts, and asking you to explain the assumptions of going concern and period reporting. So you had a thing on the accounting cycle in your handouts. It also mentions it in the textbook, but not quite as comprehensively. Number C, discuss the likely role of Mari's accountant at Smart Cuts. Now that's just a little 2-mark question saying what would a small business like Smart Cuts expect from their accountant? Reasonably expect. It's not a huge company. Number D is talking about 3 different people who might be interested in the financial information of Smart Cuts, and for each describe why and in what would they be interested. Because I am endlessly helpful, I will just run over one with you so you know what this is about. Fairly short writings only needed. Excuse me. So one person might be the bank. some of the parties. Why would they be interested? To see if their money's safe. What would they be interested in? Probably profit in cash. So you can think of other potential persons that might be interested and do the same sort of thing for each. Number E. Briefly describe 2 internal control measures relevant to smart cuts that Maori would employ and explain the function of each. I'll give you one example. She might have a petty cash tin. So, an internal control for that would be firstly to keep it locked, and secondly to keep a little cash book inside the thing that recorded what the cash was taken out, how much cash was taken out and what she used it for. So for McDonald's, ice cream sundae, $1.60.
Just have to cut up all skinny you.
Assuming she likes McDonald's. Then there's the question on GST. Just think of 3 things that would matter to smart cuts about GST. Now the one you do not have very much material on is this number 2, headed the New Zealand share market. It is actually reasonably straightforward. Firstly, pages 261 to 265 in your book cover the required material. When I find them, I'll explain them. The heading is halfway down page 261, and the heading is Investor Ratios and the New Zealand Share Market. So there's only 2 bits to that question. The first bit is to you find yourself a source of share market data, and it's giving you some possibilities. Most newspapers have it in. And the question is asking you to copy off or print out 2 sets of market results, 1 week apart. So if you did one tonight, then you do another one on, but you'd either go back and do one a week before, or you go wait and go forward and do the 2 weeks.
So you want 2 sets 1 week apart. So it's
Yes,
so
yes,
not just 1 set this week and 1 set this
Yeah.
week. It's
Yeah.
2 sets that week and
Yeah.
then 2 sets that week.
no.
No.
1 set 1 week, another set a week later. Now, you are eventually going to be asked to choose one company. So if you're smart, you'll choose the company before you print off reams and reams of share market data, and especially if you're getting it off the internet or the nzx.com, you can just print off the bit that's got your company on it, if you wish. But you will need to use the heading at the top of all the share market columns, which tells you what the columns are saying. So, for the act of getting yourself a source of this, you get 2 marks. Then you choose one company from the tables and analyse its movements on the share market. In other words, what changed from week to week. The most obvious thing you should look for is the share price. Did it change? Did it go up? Did it go down? So the first thing you do for all of this is give a brief description of the company, one sentence. The warehouse is a substantial multi-store chain retailer that tends to deal in lower price ranges, or something like that, just a sentence. Also discuss the movement of the company's figures in relation to the NZX 50 index. Now the New Zealand 50, NZX 50 index is the one that's sort of quoted on the TV every night. NZ Top 50 or something like that it says. That is a figure that, oh goodness me, what is it now? I think it's somewhere in the 6,000s. I stand correction on that, but it's something like that. In your analysis, to get the whole 4 marks, this is only a 6-mark question, would probably get you to discuss one of the ratios that people would tend to be interested in. The easiest to find ones would be on page 262, earnings per share, or EPS, and on page 263, dividends per share. One will do, just discuss one of them. Aim of that question is basically to put you in front of what these things look like. Now, the biggie. The biggie is you have to produce a balance sheet. And from about halfway on, there's a whole heap of requirements. I'll just run down those with you first and then come back to how you need to make this balance sheet. Firstly, describe the purpose of a balance sheet for 1 mark. Then for 5 marks, you, in your own words, show the difference between an asset and a liability. Good easy marks, and that is. Then you write a short thing on how you decide whether an item is a current or a non-current asset or liability. Give an example of each. Current and non-current asset, current and non-current liability. Now there's a bit of a trick question there. Give an example of each not in the list above that smart cats might have in the future. This is a classic example of read every word in these questions. Because the odds are that a third of the class will look up in the list and find a couple and say, that's good, I know that, and put that down. But you're doing it by reverse. Number C. From the information in the list of balances for smart cuts above, what can you assume about the firm's policy for accounts receivable? I'll give you a clue, but I'm not going to tell you any more than that. The clue is, do you think they're collecting their money quite quickly? In other words, that the accounts receivable is reasonably low according to their sales? Or do you think they're collecting it quite slowly because the accounts receivable is quite high relative to their sales? I'm dangerously close to answering that question. Number D. Using figures from the list and additional information above, prepare a fully classified balance sheet.
Oh, here it is.
You eventually get to this. So, let me start to do this. The first point is, use a format the same as I told you about last week. There was one on the handout, and there's one in your accounting text.
Third point.
Page 101 and 115.
101.115. Thank you. On page 110, was it?
101.
101.
101
So put that. Yep, 101.
and 115.
Those are two standard vertical formats. They look pretty much the same. I would recommend for this, over to you entirely, that you look at those formats nice and carefully and set yourself up a spreadsheet to put the numbers on. There are two reasons for that. The first is the spreadsheet will tend not to make adding mistakes. One of the early definitions of a computer was that they are incredibly fast, incredibly dumb adding machines. Now, time has passed, and you might wonder about whether that is quite so true anymore. But anyway, that's a diversion. Get it onto a spreadsheet. That won't then make mistakes, and you'll constantly be able to look down the bottom, and the spreadsheet will have added up the assets and the liabilities, which should balance, and you can spend hours and hours and hours wondering about why they don't balance. Now, about halfway down the page, there is a italics bold heading called additional information. Two bullet points. The bank loan is paid off in equal portions each year. 2 years payments to go. Have a think about it. I'm going to let you just figure out if you can see what that means. And remember these things, there's two things to remember about this bank loan. In the period, which is the year ending 31 March 2013, you will need to record the equal portions for the months of this accounting period. And that will become the total of the bank loan due March 2015. But there's a wee trap here. The loan might be due 2015, which are only talking about the 31st of March 2013. Second bullet point. On 31 October 2013, the owner contributed personal furniture to the business worth $10,000. This has not been accounted for in the balances above. So you have to put into your balance sheet the double entry that will be. Now, what I'm going to say to you about this is do want you to go away and have a good old attempt at doing it. But I don't want you to get stuck going round and round and round in circles horribly and driving yourself bananas. So next week, Wednesday, next Thursday, the class here, I'll be very happy to take any queries on it or anything like that to unhook you from any problems. There are two more requirements, 1.5 marks each. Number E, explain the term understandability.
Page 51.
That is on page 51 of your textbook. And comparable.
Page 50.
How do you know?
Because I was looking it up while
Well, I've badly wrong. In a nutshell, that's it. The biggie is the balance sheet. Do your best to get it right. Sort out the format of one of those, either from your handout or from the two page references in the book. So, given that I am a accounting for non-accountants tutor, are there any questions? Worries?
Can you just explain that bank loan thing again?
Yeah.
I don't get that.
It's,
When
It's
was the first one
trying to
taken
fool
out?
you.
2013.
It's fairly straightforward.
it's 24,000 due.
So it's 12,000 a year.
Yeah, it's
But
paid
you
in
still-
2 instalments.
Which is 2014 and 2015.
Yes,
But you've got to account for whatever part of it falls into the 2013 year. But when did you take the loan out? It doesn't say when she took the loan out.
Because it says it's, you've only got 2 years payments to go.
Mm.
So when did you actually start taking out the loans? Did you actually,
Has she already paid?
now
has she already paid?
what
Yeah.
you
The
know
installment.
is that there is a balance
Of 20,000.
of 24,000 as at the end of June, March.
2013.
March.
Of March.
Right.
2013.
So it has got, I've lost it, 24,000. It has
2 years payments.
It has got 2 years payments to go,
Which brings you to 2015.
which brings you to 2015.
Which is 12,000.
Which is $12,000
2
a
years.
For the next 2 years.
Yep.
No, it's due the 30th of March in 2015.
Yeah,
that
just
gives
watch
us
the
2
dates.
years, though.
Mm.
So 2 years prior to that is the 30th of March in 2013.
From my thinking, the bank loan possibly, because if it's due the 30th of March and you're paying it on the 30th of the month, you've just paid that year's instalment.
Don't hold me to this because I usually get these things wrong. I think it's looking for you to perhaps think about an accrued expense. You've got this thing on the book, and in the new period, you're going to have to pay some money.
Yeah, but I think what's boggling me is just the 2 years payments to go.
Mm. Of equal instalments.
Of equal
portions.
instalments, which is $12,000
Yeah.
each.
Yes, that's true, but you already know, lost it out.
Then on the 30th of...
Yeah, the bank loan. You already know that at the end of 2013, there's 24,000 owing. And you know it's ending on the 31st of March 2013. Yeah. Therefore, you can work out what the monthly payment's going to be,
Oh. But that wouldn't come into.
but it would
the
be an
balance sheet.
accrued expense. You've got to show that you're up for it. Then you've got to decide what is it. Is it a current liability or a non-current liability?
And it's got to be understanding.
Well, if you're paying for it monthly, or I suppose, yeah, allocating for it monthly, it's going to be $1,000 a month, so you're going to accrue somewhere over $1,000 per month for March.
It'll only be worth a sort of, I guess, a sort of market to get it wrong, but just do your best with that. I don't want to give you all the answers just yet, but I'll unravel it if any of you get desperate at next class. I don't want you going on forever about it. It's only a few minutes. Anything else? Anything else?
Read it. I know, hold on.
Okay, we're a bit short and sweet on this. It's about as much as I can give you without answering it for you. You will notice I have videoed it, so if anybody particularly wants a video afterwards, if I can be a real nuisance and get you to send me an email so that I can do it.
Well, you know I want to email.
ENH@tpp.ac.nz.
ENH,
ENH@tpp.ac.nz. Now, the reason I'm asking you to email me is I might get all technological, if quite a few people want it, and biff it on YouTube. And if I did that, you would end up getting an email in reply to you with a link on it, which you would click on, and all other things being equal, the YouTube would pop up and play the video, because it won't be a very long one. Alrighty, well, have fun with that. It's worth 30% of the, or a third of the paper. I'm still bending my mind about what we do with you for client management. I haven't quite got an answer yet. Yes, I think she's rung Kate to say that she's left, but I'll know for definite when she's talked to Kate. Hang on, I'll just turn that bit off.
What are you doing with your next free hour?
25 minutes.